But there is probably a bigger takeaway in all of this, and that is that the Chinese economy is incredibly weird. Another thing to consider is those low interest rates. A big debt at a low rate can have the same repayments as a smaller debt at a higher rate, putting the same net strain on government budgets, and as we've explored earlier, by luck or by design, the Chinese government is able to borrow at very, very low rates. But this is where breaking up that debt over so many different government entities actually hurts them. Sure, the central government can borrow at low rates, but provincial governments pay significantly more as they are riskier and don't have the same direct control over state banks. And then beyond that, state-owned enterprises often pay rates as high as 10%. The country has an immense amount of debt, all hidden away amongst various different levels of government, used to fund various government and semi-government organisations that may or may not be developing genuine long-term prosperity for the country. So far, they've been able to get away with it because rates are low and money has been easy to create because inflation has remained stubbornly stagnant, but that's come with its own problems, and it's also a narrow view of things. Inflation may be low, but only in the way that we typically measure it, which is the Consumer Price Index, or basically a basket of household goods roughly indicative of average household spending. Yeah, sure, those items have had incredibly stable pricing because the country basically makes everything, and the average consumer is still very frugal. But inflation is basically like holding a balloon in your hand. Fill it up with enough money and it's going to bulge out somewhere. Sometimes this is consumer prices or stock market prices, but in the case of China, it's clearly been real estate prices. Unfortunately, this is not a particularly productive asset class. If the housing bubble continues to wobble or general inflation takes hold, China could be in a lot of trouble. A debt burden that large, even if it is owned by internal state-controlled banks, is always going to be unwieldy. But there is probably a bigger takeaway in all of this, and that is that the Chinese economy is incredibly weird. We've been comparing figures to the USA as the most logical peer, but in reality, it just functions completely differently. The USA has a private sector that's underregulated with too much capital being thrown around. China is overregulated with the government really pushing out most natural development. The USA overconsumes, China underconsumes. The USA has had problems with stubborn inflation, China deflation. And yeah, when it comes to debt, the situation isn't as adversarial as it would look on the surface. China may buy a lot of US debt, but it has a lot of its own that it's buying from itself. A real falling out between these two economies wouldn't have a winner and a loser, it would just have losers. It is easy to look at current global events and conclude that this is China's time to shine because the USA is making so many missteps. But that's also unfair. China has just as many, if not more problems than the USA. They're just a lot better at keeping it to themselves.